The big three of DeFi, Uniswap, Aave, and Lido, are posting record-breaking on-chain metrics that dwarf their performance from 2021. But there's something wrong. Despite these DeFi platforms reaching new all-time highs in terms of total value locked, the amount of value inside the protocol, the underlying tokens that represent this protocol haven't even beaten the last all-time highs. They're still incredibly low. So let's look at the data to see what's going on, because I don't think they'll be this cheap forever. Now we will start off by looking at Lido Finance, the biggest liquid staking protocol on Ethereum. It is the place for decentralized staking, really, and it secures an insane amount of value, $30 billion almost. If you look at the underlying token, the Lido DAO token, you can see that it reached a high of around $5.7 in 2021. But even though it has grown a lot since then, it is only worth 62 cents at the moment. Just looking at Lido itself and the total value locked, you can see that it has grown immensely since 2021. The previous peak, which was at the beginning of 2022, was 15 billion. At the moment, they're almost at double that level, and its peak was more than $40 billion. Meanwhile, they've released a number of new products, like all kinds of vault strategies and options, as well as things like community staking module, decentralized validator technology, and dual governance, allowing stETH holders, so users of Lido that don't hold a DAO token, to have some form of say in the organization and the validators itself. The community staking module allows other people from outside to easily and permissionless join the validator set and help secure Lido Finance and Ethereum without the organization having to necessarily check everybody's background and all that stuff. And the distributed validator technology increases diversification and therefore the robustness of Lido Finance staking protocol. So in every way imaginable, Lido has expanded, evolved, and improved. And now they're also thinking of a direct value capture model. So they want to do an update where they use fees and revenue collected from staking by Lido to buy their own DAO token and basically burn it or lock it up somewhere. In a way, it's like a buyback. It's a form of a buyback, which will lead to value accrual of Lido DAO. It will make the token itself more valuable, just like a stock buyback does, because you're lowering the amount of tokens or shares in circulation, making the shares that are out there more valuable, because they're harder to get. There are not as many. So this will likely lead to the Lido token increasing in value. But for some reason, everybody is ignoring it. Now the next protocol we're going to look at is Aave. This is a lending and borrowing giant on Ethereum and its many layer 2s. And it has even launched a sort of savings app now, giving you 6 to 6.5% of interest while protecting your balance, having an insurance on your balance of up to $1 million, which is crazy. If this is actually as good as they promise it's going to be, then stablecoin savings accounts will certainly replace normal bank accounts as savings accounts, because there is no company or financial company out there that can match Aave in this offer. Most of them insure up to $250,000, and they offer at best 4% interest, not 6.5. Meanwhile, the protocol itself has been evolving over the years, with more layer 2s and other blockchains being adopted, as well as launching a real-world asset section where you can borrow and lend against real-world assets like government treasuries, private credit or debt, gold, stocks. All that stuff is coming to Aave as well, which again leads to value accrual. But for some reason, the Aave token has not been able to beat its previous all-time high of around $500, even though the amount of money, the amount of total value locked in Aave has only increased, going from a peak of around 30 billion to almost 60. And at the peak, it was even at almost $75 billion. Now, just like Lido, they are planning on launching a buyback program. To an extent, they're already doing this. They're buying Aave and then either burning it or holding it as a form of buyback, leading to value accrual for Aave holders. And aside from that, you could also use the safety module, which is a specific module where you can lock tokens, and those can be used to cover any shortfalls if the platform gets hacked. You can also obtain a 3 to 4% yield here on Aave by doing just that, while also benefiting from the buyback. The DAO using revenue and money they make from the platform by the little fees they take for every interaction to buy their own DAO token and basically take it out of circulation to make the remaining tokens out there more valuable because scarcity. So this is another protocol that has gone above and beyond and has evolved a lot and has improved a lot. But for some reason, the value of its token is still relatively low. It's not as bad as some of the others like Lido, but it's still surprising that Aave's token is nowhere near the 500 that it had during 2021, even though it is much bigger than it was. However, there's one other project that I want to look at. Now, the last project I want to look at is Uniswap, the biggest DEX out there, the biggest decentralized exchange in the world of crypto, allowing you to switch any cryptocurrency to another cryptocurrency, or you can use your money to facilitate these trades and earn some fees. Now, just like all the other protocols that I've covered so far, they have gone above and beyond to grow and expand. Uniswap used to be relatively small. Relatively. For example, during 2021, at its peak, it got $86 billion of DEX volume. But now, its new peak from 2025 was almost $125 billion. And as you can imagine, it's earning fees from all those swaps, all that interaction. Meanwhile, it has launched a number of new products. For example, Uniswap V4, which is a lot more customizable and adds new features. They have created their own wallet, their own mobile app. They've created their own layer 2 Unichain, allowing for faster transactions on Ethereum by using a layer 2. If you want more information about that, I've covered this in the past. So again, just like the previous platforms, they've done a lot to grow and expand and improve. But for some reason, the value of its token peaked at around $42 and is currently sitting at $5.50 and has never really recovered to those all-time highs or even beaten them, even though the platform is much bigger, has a lot more users, a lot more volume, a lot more products, a lot more everything. So once again, this is an example of an amazing protocol that has gone above and beyond, but for some reason, people just do not care. The fundamentals are detached from reality. Under the hood, in the engine, this protocol and Lido and Aave have expanded their product suite, have gotten more users, make more money in every way imaginable, but for some reason this value has not gone towards the underlying DAO tokens, basically the shares of these protocols. And just like all the others I've mentioned, Lido and Aave, Uniswap is also working on a new proposal called the Unification, where they use fees and revenue made by Uniswap and its suite of products to buy their own token and either burn them or hold them, again serving as a form of buyback. At first they wanted to actually pass on the revenue to token holders in a form of like yield, but all of that is kind of difficult to do in the regulatory landscape. But all of that is improving, so we could also see Uniswap holders earning a form of dividend by holding the Uniswap token. In general, all these platforms are expanding and growing, launching new versions, new applications like the Aave Savings app or Uniswap's Layer 2 or their own wallet, or Aave launching their own stablecoin, Go. I didn't even mention that. That's also a massive event. Or Lido creating dual governance, allowing STETH holders to actually have a say in the protocol, or the vaults allowing STETH holders to make even more money by using DeFi to increase their yield, or the community-driven staking, allowing anybody to join Lido and stake their own. Really, there are so many things about these three DeFi protocols that have improved over the years. Really, they're a feat of engineering. And now they're also working on making sure that their token, Aave, Lido, and Uniswap's tokens get a form of value accrual, either by buybacks or forms of yield. So you can expect the value of these tokens to go up. And at the moment, a lot of crypto users are asleep at the wheel. They think the current cycle is over, there won't be any alt season or any of that, so just, who cares? But in the meantime, these protocols do not care. They continue to grow, to expand, and are now even taking on traditional finance in many ways. So I think that at the moment, there's a disconnect between reality and the fundamentals of these protocols. And just like with any bull run or bubble or bear market or depression, people can be overly optimistic or overly pessimistic. And I think people are incredibly pessimistic about these DeFi protocols, and they're very undervalued. So now could be a great time to scoop up these wonderful assets of these amazing DeFi protocols that I personally have been using for years as well. Now, I hope you all enjoyed this video. Be sure to check out the full-fledged article that I wrote about all of this with more information and data on eToro. Be sure to check it out. I have an eToro portfolio there. You can also copy my portfolio to do exactly as I do, invest in the same ETF, stocks, and cryptocurrencies. Or you can just go there to read some of my articles. I post around 2 to 4 articles per week. Link will be in the description, so be sure to check that out. And yeah, may the markets be with you.